Hey guys, thanks for joining the Stock Option Market Weekly Update for the week of December 23rd, 2024. So Merry Christmas to everybody. We are going to touch on the interest rate cut that we just had this week, quarter point. We're going to look at rates going forward for next year. We're going to talk about some of the economic data that is out, and we're going to touch on how the market's done year to date and what it looks like next year. And then we'll jump into the trades on the live option trading platform. Before we get started, be sure and hit that like and subscribe button down below. Also, download the free options workshop. It talks about the main advantages of trading options over buying stocks. All right, guys. So if we look at last week, this is the last 5 days. We ended up the week in the S&P 500 at 59.30, and that is down, I believe, about 2%. Let's see where we're at with the sectors. So the 5-day, 1.99% last week. So down quite a bit. However, year to date, we are still up quite a bit. If we look at year to date, we're up 24%. But you can see last week, every single sector was down. Wow, energy was down big, 5.69%. Materials and real estate both down 4%. So a lot of big moves down last week with that quarter point cut with interest rates. So let's look, let's touch on real quick year to date and where we ended up. We're up 24%. So another good year following the prior year of 20% as well. So I see next year looking good as well. A lot of the analysts are thinking that we're going to continue to move up next year and be in that 6,600 to even some are saying as high as 7,000 next year. But you can see how all the different sectors performed. A lot of them, technology, utilities over 20%, financials, consumer discretionary, and communication services all did really well. We had that quarter point cut by Jerome Powell last week, and there is a 91% chance that come January there will be no cut. And that's basically what he said. There's going to be maybe 2 cuts next year as opposed to 3 or 4. So that's why the market kind of tanked last week. And then if we look at the numbers coming out next week, there's not too much with the Christmas holiday on the 26th. We've got some job unemployment, initial jobless claim coming out on Thursday. So let's jump into the trades on the platform. By the way, if you'd like to get a free copy of the Options Strategies Trading Guide that outlines all the different strategies as well as how to manage them, comment Options Guide down below and I'll send you the link. So the first one, applied materials. I've got 2 credit spreads. We're at 163 right now. In applied materials, if you look at the curve mode, we're on the Tasty Trade platform. I like Tasty Trade as well as Moomoo. There's links down below, so check those out. There's benefits if you join through my link, and you can get some free stocks through Moomoo, and I believe some cash back from Tasty Trade. But both great option trading platforms. We are still in the profit range here at 163, but you can see the short strikes and then but we're right there. It's pretty close. But I think applied materials, semiconductor manufacturing equipment, the RSI is way down. So I like to look at the RSI as well as the charts. And then we've got the 13-day moving average in the green, the 50-day in the red, and the 200-day in the yellow. And we're well below that. But, you know, I see semiconductors doing great and semiconductor equipment. We've got more manufacturing coming back to the U.S. Semiconductors and applied materials, the leader in the manufacturing equipment, should do well going forward. My target for applied material 40, so it's way up there and it's way down right now. So to me, this is a no-brainer. I'm just going to keep, as long as IBR is above 20, I'm just going to keep doing put credit spreads and keep rolling them out and making money. Oh, sorry, looks. There we go. Okay, we're back up. Technical difficulty. All right, so Applied Materials is right there. Next one is AMD, another one. I'm gonna look to put a leaps on, buy that for 2,500 come tomorrow Monday when the market opens, and just go long because you look at AMD. I think this is the best play in the market right now. It's down so far. AI is expected to boom, and AMD is going to do great going forward. They've got a CAGR, a growth rate of like 38% in the AI sector, and these guys are a little bit slower than Nvidia, but the big B of A downgrade really pushed them down. But to me, AMD is a no-brainer, and I can see it a stock double from where it's at right now. So I'm just going long. I've got leaps, and then I'll sell calls against it, and you can see it's already moved down. I made money on the calls, but it's eventually going to move up, and you can make money on both sides of the market doing leaps and poor man's covered calls. So that's what I'm going to continue to do in AMD. If we look over the last 30 days, we've gotten killed, but yeah, just lately we've gotten killed in it. But I think long term we're going to make that up pretty quickly. Broadcom, Avago, as it's known as now, has done well for us. Just in the last 30 days, we've made 735 bucks, so done pretty well in Avago. We've got the 215, 205 put credit spread. My target's 220, so we're right around where it should be trading, in my opinion. But it did have a move up, so I like Avago long term in the AI chip sector. But again, it's at highs right now, 26 days. I'll probably close out and then maybe wait, although Ivy's good, Ivy rank. So maybe throw on an iron condor or something in February. But I'm going to wait another couple of weeks and see if we can collect the premium, and as long as it stays above that 215 range, and we're in that profit zone right now. Chewy, we've been doing leaps and poor man's covered calls against Chewy. My target for Chewy is a little bit higher, $37, $40. I think it's a great company as far as shipping pet food. People love their pets, but I just sell calls against the leaps option, poor man's covered calls. So on the long strategies, you can see I love the poor man's covered calls, the leaps. Coin, IVR is high. It had to move down. So we are now not in the profit zone. We're at, we've got a 300, 290 put credit spread on in coin. And yeah, we had that pullback. But I am long coin and Bitcoin going forward. So I will look to, my target for coin is about 300. So we're almost there. Maybe I'll throw on an iron condor, close this out, probably wait a little bit for it to come back, see what it does next week since we had a big down week last week. DraftKings, again, poor man's covered calls, 2 leaps options, and the 41 calls against it. We've done well in DraftKings. We've been highlighting this one all year, but over the year we've made 3,400 bucks. So done pretty well, just trading a couple of leaps options and selling calls against it in DraftKings. ELF, 125, 115, $10 wide put credit spread. I like it to the upside. It's down below the 200-day. Their fundamentals are excellent. If you look at the financials and their revenue and net income year over year, and then their balance sheet, assets and liabilities, everything looks good for ELF, and it's done pretty well for us. I'm long ELF. Target is 170. It's at 128 right now. So they just in the last couple of months, we made 516 bucks. So we're gonna keep doing what we're doing in ELF and stay long. Gold, I've got iron condors on, still $372 in extrinsic left to collect. We're up 118 on this particular trade. Um, you know what? Before we get there, FedEx was before. We did a earnings trade last week, so I think I closed that out. But if you look at I think we made a couple $100. Um, yeah, we let it expire. So we had the 260, 250 put credit spread on in FedEx. They came and blew out earnings. Wow, now they just dropped back down. But we closed it out for a quick $200 on an earnings trade in FedEx. So um, and the reason that that I played it is because we were down near that 200-day moving average and low on the RSI. So I just went long with the put credit spread. Um, so gold, again, we've got the iron condors on, and you can see we're right in the middle of the profit zone right now with the gold, and we made, I think, a couple $100 over the last 30 days. Yeah, $281 over 30 days, so done pretty good. It's just been trading in that range, and here's my strikes up here at 250 and 235. I'm just going to look, as long as IVR is 59 and we're trading in that range, I'm going to keep throwing on those iron condors. But I've got a couple different dates in January. I think I made a mistake when I put the second iron condor on, but we're 19 days and then 26 days on one. So yeah, 26 is the regular options chain. I went a week earlier with one as well. And Home Depot, I'm looking at putting that back on because it seems to be trading in a range. We just made a couple $100 on an after earnings trade. Yeah, $282 just on this iron condor. Sold it for $355 and bought it back for 73 cents, $73 in order to make 282. And we did this just in a month. But I like the range that it seems to be kind of trading in, but and IVR is high at 29. So I'm looking Monday. I've got this trade set up to go $10 wide on an iron condor and collect 1/3 the width of the strike, so around $3. IWM, the Russell 230. We're down below it. We had the drop last week. RSI is down. That's okay. We're down here at the 200-day moving average. I'm just going to stay along the Russell. I think with the new administration, less regulation, the small caps should do well going forward. So I'm going to keep put credit spreads on. IVR is good, so we collect good credit there. Both Lockheed and L3, two great defense companies, should do well going forward. They're both down recently. I think it was Musk coming out and saying that, unmanned aircraft is the way to go, but these guys are the big defense primes. They're going to keep on going. Lockheed, I'm actually going to throw another one on because look at this. Look at how far down below on the RSI and down below the 200-day moving average. So I'm going to throw another tranche on and go $10 wide and collect another couple $100 on Lockheed Martin. But I don't think I can go down to the 475, 465, which would put us down here. So yeah, way down below the 200-day moving average, and I think defense is going to do great going forward. So I'm going to stay long. Marvell, great AI chip stock, and I'm looking at buying a leaps and then selling a put credit spread because IVR is fairly high, third the width of the strike. It is fairly priced right now, but I think Marvell is one of the top AI chip sector plays. And then you can sell calls against that leaps. So just looking out, to February, we could sell the 125 and it's trading at 111. So still leaves you $15, huge upside move. And you can collect $300, $296. So that's my whole strategy when these stocks are down and they're good stocks. I'll just do leaps and sell calls against them. Micron is another one, same situation, two put credit spreads in Micron, and it had earnings come out and they guided lower, and it got slammed. But I'm just going to stay long on Micron. My target, is up in the upper, 160, 170 range, and we're at 90 right now. Um, so we're just going to keep doing leaps and put credit spreads going forward. Nvidia, still a great buy right now. It had a little bit of a pullback. Yeah, RSI is down near the bottom, but I've got put credit spread. I've even got the call side on the 140. So iron condor and then two leaps options in Nvidia. But I think Nvidia is a no-brainer right here. Um, Occidental Petroleum is down 47.5, 40 put credit spread, and we've had a big move down. So that's where I decided to get long and sell some, put some premium, collect it, and this is a big Buffett stock as well. All right, Palo Alto Networks. This is one I'm looking to put on. It's been up. It's not in bad position, but I want to get a cybersecurity stock in there. This is the best of the best, so we can collect a couple $100. Palantir, I've got iron condors on just because it's had such a run up. So I think it's going to trade in this range going forward. The IVR is 63, so I've got the iron condor on there. Qs, I'm looking to put another iron condor on in February and collect third the width of the strike, $340. SMCI, Super Micro, I'm going to do a buy a leaps as well as sell put credit spread $10 wide in February, collect a third the width of the strike. But Super Micro is way down, and oh yeah, this is not Super Micro. There we go, Super Micro, and then you can see it's way down below the 200-day moving average. So it's a great buy right now. It's a no-brainer AI stock. For the data centers, they make the big servers and the motherboards, and they've got specialized cooling. So they're the dominant player in the game for those servers for the data center. And they had an issue where it dropped due to some accounting mishaps, and I think it was proven that there was nothing wrong with the books. I don't know the details of it, but I don't see it as a big concern, and they're going to continue to do great. So I'm definitely going to stay long Super Micro, and I've got a leaps on as well. So what's nice about the leaps, for $1,100 you can buy, or $1,200 you can buy that January leaps option, right? Close to half the money at 30. So if you look here, and that is still 64 percent, or no, 71 delta. So pretty good delta, pretty high. So for every dollar move in the stock, it moves 71 cents. So it's almost like controlling 100 shares of stock to 71%. And then what you can do is you can sell calls against that. So again, collect $400 at 35. So you make money as it moves up to 35, but if it doesn't break that, you keep that $400 that you collect, and you can do that every month. It's only going to take 3 months. 400 times 3 is 1,200 in order to pay for that leaps option, which is a no-brainer. So, man, I should do a couple of those. SoFi is another one. We've got some calls that I've sold, a couple of them against the 6 leaps options that I have, but SoFi has done really good. Just had a big move up. So in the last 60 days, we've made $4,400. Done really well in SoFi. And I think going forward, it's going to continue to do well. I'm kind of waiting for a pullback. It had a big run up, and but I like SoFi long term. All right, a couple more. Sound. This is the big AI sound company, dominant player. I'm going to dig into it more, maybe do a video on, but I'm looking at the leaps. It is up. Yeah, it's been pretty parabolic, but I want to get my feet wet with it, and maybe buy one and then sell a call against it. Let's see what the calls look like in February. Yeah, wow. You can go out to 27 and collect $400. That's crazy. That will pay for the whole 800, oh no, 1100. I put it way below the market, but 3 months and you're controlling that for free. So that's my whole strategy with these leaps and poor man's covered calls. Tesla, I've got some iron condors on. January, a couple of different dates. Again, I did that January 10th. I don't know what I was thinking, but that's okay. We're going to stay. We're in that range. We're in the profit zone. It was down a little bit on Friday, but it's I'm looking for it to stay trading in that range. And then coming 3 more left. Upstart. All right. Great AI lending analysis tool, and I've got calls that I've sold against the 2 leaps that I have. I'm looking to put on now an iron condor, as well as maybe buy another leap option in Upstart. But it's had a run up, but I think going forward it's going to be a great company, and they're doing really well. Viasat. This is a smaller company down here in Carlsbad. I'm on the West Coast in Southern California, so they're down the street, not too far. But you can get a leaps option. They're expected to do really well going forward. So I like Viasat. I'm doing it more to track for my own since it's local. And then ExxonMobil trading in a range. It's moved down, but we've done pretty well on ExxonMobil, over the year. And I like when it trades in a range. I'm a little bit long right now after the big drop, and but once it gets down to this level, I like to move a little bit longer. But I don't think we did fantastic, but yeah, we made $1,000 this year so far. So all right, guys, I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Leave a comment. Let me know what you're trading. Ask a question. I answer every one. Thanks for watching. I'll see you in the next video.